Let's talk to Eddie Tofpik. He's the head of technical analysis and senior markets analyst at ADM Investor Services International Limited. Very good morning to you, Eddie.
Good morning to you.
Right, three charts in this segment. Let's kick off with the Mexican peso. What are your thoughts on the charts?
Dollar Trump, as we've called it in the past.
Very good.
Caught between two areas, which is the long moving average support, that's at around about 1845 or thereabouts, 1845.60, and the medium moving average resistance, that's 1894.80. Now, the double bottom target, which was 1930, I don't think it's going to go for that at the moment. It may not, I don't think it'll do it. It's up, that's the X marked up there on the top, just underneath 1930. It's more likely, I think, at the moment that we're going to be caught between these two moving averages and carry on. Now, if we carry on like this, there is an opportunity, which I haven't marked on that chart, that this whole action from October through to where we are now is a very big head and shoulders top. That we may see the Mexican peso then break through the neckline, which must be around about 1820, and then go down. But the one thing that's holding up is the July today uptrend. That's holding around, where are we? Around about the 18 even area at the moment, or just above it. It's caught between two areas of support and resistance. It is traveling between those two at the moment.
Understood. Okay, let's move on to Brazil, the real.
Interesting in its own way. It's just about finished with the reverse head and shoulders move up. You saw that way back in the middle of the summer period time. It's a messy chart, but it's starting to see a thing happening together, which is all the moving averages are coming to a cusp. There's a thing called a bow tie formation, when you have three moving averages come together and then splay out, much like you would see a bow tie.
Okay, that's good stuff.
So they're not in the right order, but it's still coming towards that. At the moment, it looks bullish. So it would be reasonable to see this move up, especially since we're above 323.36, which is the 50% fib of this recent move since December, this year in December. It would be reasonable to see that to move up to about, say, 332. What would be key is, should we manage to get 332 if we go higher? If we don't, then we've got receding highs. We're getting lower highs all the time, and that's a concern. I think at the moment we might see a little bit of a free move up, especially if we go above this, which I thought would be quite a strong resistance, which is the November 16 to Feb 17, 50%, which is 327.28. But all that did was hold the market down yesterday. It may open above it, it may go even further, but 332 is the top side resistance area. There's a lot of support underneath the market, long moving average, all the other moving averages, and you've got this bow tie building.
Understood. Okay, let's wrap up with the Indian rupee.
This is our own particular brand of pain for those out there. As you can see, and I'm not going to talk about the fundamental side of this, we've gapped up, we've moved up, we've had a key reversal up, we're underneath all the moving averages, the long, the medium. This is a great chart to use for show how compound support works. You've got a 50% fib at 338 or thereabouts, 85. Sorry, 64.38.85. You've got the long moving average just underneath 64.38. The medium moving average is 64.37. All of those are holding the market up and pushing up. What have we got? Above the market, holding out 65.28 is the November 2016 to date downtrend. That's the first real resistance. Not that stuff back up in November, the high. That'll come later. You've got to break that, and that's where it will sort of suddenly judder to a halt, one would hope, and sort of work along a bit before we move higher, if we move higher.
Thank you very much, Eddie.
Thank you.